Alright guys, so if you're a fan of money, drop a like on this video. I should see everybody dropping a like on this video because every one of you should be a fan of money. So if you're a fan of money, drop a like on this video. And today we're going to be talking about AMD, and I just want to talk about a couple things. I want to talk about the stock market in general, but I just want to mention AMD briefly because I think it's important. AMD, when I bought it, was $8 a share, $11 a share, and between $13 and $14 a share. Those are the times I picked up and bought into AMD. Currently, AMD is sitting at $30.53 a share. I know people that bought in at $2. I know people that bought in at $4. You know, some of them sold, some of them held. And there was people that bought in at $2 and held and are just now selling the stock. They made 1,500% off of AMD stock in less than 2 years. And the way you pick up on the stock market and the way you figure these things out is you look for underdog companies that have the potential to grow. So you want to look for a company that may not be a top leading competitor in the market, but they're developing something new that has the chance to boost them up to be a top competitor. That was AMD. AMD had not developed a competitive chip in like 10 years. They came out with the Ryzen series chip. It's competitive to Intel. It's priced lower. It was technically, for the money, the better chip. It's kind of like a Corvette versus a Ferrari. For the money, the Corvette's the better car. Most people are probably going to want the Ferrari, but not everyone wants to pay for a Ferrari. So if you want a high-performance car that has the ability to smoke a lot of the cars on the street, you pick a Corvette. Same thing applies to these chips. AMD may not have made the best chip, but they made a chip that was way cheaper than what Intel made, and it was able to compete with Intel's chips. And it wasn't that far behind performance-wise to where people didn't want to pick it up. It was literally neck and neck. So I wanted to talk about this company today because this was a company where if you would have picked it up months ago, even a year ago, you'd have made quite a bit of money. Anyways, in general, guys, you want to buy stocks obviously when they're low. People make the mistake of watching a video like this and then going on and buying stocks immediately. You don't want to do that, all right? Not only should you do background research, but at the same time, you need to think about it. The stock market has been high for like 10 years. It's going to crash eventually. I can't tell you when the crash is coming. Could be the end of this year. Could be 2 years from now. I don't know, but I do know that it ain't going to go up forever. And when it crashes, I'm going to take my money and I'm going to buy stocks I like, because once it crashes, you're getting stocks for cheap. You're getting stocks that people are selling because they want to get out, you know, and the whole market just goes down. And that's when you should be looking to pick up shares. So when the market crashes, that's literally when you should go and try to buy stocks. And I'm not talking like the day of a crash. I'm talking, you know, it might take 2 or 3 years into a crash for the whole economy to go down. And that's when you're going to pick up stocks. You want to buy stocks after they've been battered. You want to buy stocks while the economy's down. You don't want to buy stocks when the economy's growing. Like right now, the economy's growing. Bad time to buy stocks. Why? Because they're going to crash eventually. You're going to pay top dollar for a stock today. 3 years from now, that stock's probably not going to be worth what it's worth today. It's probably going to drop in price quite a bit. So you want to buy stocks that, like I said, underdog stocks, stocks that aren't like Apple, all right? Coca-Cola, no, you know, not stocks like that. Those are long-term dividend-paying stocks. You want a stock that has room to grow, a stock that's going to develop something new, that's innovative, that's not at the top of the market. Those are the stocks where you're going to take more of a risk, but you're also going to get more gains. If you want to make money, you're going to have to take risks. That's just how it is. Also, you don't want to make the mistake I made when I first started and think that you're losing money. Like, you might buy a stock, it might drop a couple of dollars, you might get scared and just panic sell. You don't want to do that, all right? I did that, made a huge mistake, panic sold, lost a ton of money. Literally like 1 month later, the stock was almost double what I paid for it. So I could have made, it was like $6,000 in 1 month, and instead I panic sold and lost $1,000. Because I wasn't thinking, I wasn't paying, you know, I wasn't playing my cards right. And as a result, I panic sold, I lost some money, and it didn't turn out too well for me. So when I buy stocks, what I tell myself is, I'm either losing this money or I'm going to make a lot of money. It was one of the two things that's going to happen, because I do not sell for a loss unless there is absolutely 100% positively no hope for that stock. You know, like we're talking near bankruptcy, they're about done. Other than that, I'm not selling. So when I invest in a company, I invest to hold it for the long term, because that's when you're going to get your gains. Do not panic sell. If you panic sell, you are going to lose money every single time. You know, leave that to the day traders that know what they're doing. So anyways, this was just a brief overview. I just wanted to talk about AMD and a few other things. Make sure you guys subscribe to this channel. Don't forget to drop a like on this video, and stay fresh. I'm out. Peace.